Imagine a sleeping giant. It's powerful, it's massive, and it's full of potential, but it's just lying there doing nothing. In the world of multifamily real estate, this sleeping giant is something that's probably lurking in many of your portfolios, quietly killing your growth. I'm talking about equity that isn't pulling its weight. For a lot of us, the goal is simple. Buy a property, watch it go up in value, and let the rent checks roll in. And that's great. It's a fantastic feeling to see your equity grow. Your property appreciates, you pay down the loan, and you feel like a winner. And you are, to a point. But here's the trap. As your property's value soars and your equity grows, is your income keeping up? This is where a crucial metric comes in, return on equity, or ROE. It's a simple question. How much income is your property generating each year compared to the amount of equity you have tied up in it? In a lot of cases, that equity line can start to outpace the income line. Your equity might be getting fatter and fatter, but the cash it's spitting out isn't growing at the same rate. This is where your sleeping giant shows up. It's a huge chunk of your wealth that's just sitting there. Let's look at a real-world example. Say you bought an apartment complex for $4 million, fast forward a few years, you've been a great operator, rents have gone up, and the market is hot. Now, your property is worth a solid $6 million, fantastic, right? But what if your annual cash flow is still only around $200,000 on that $6 million valuation? That's just a 3.3% return on your equity. Is that the best that your capital can do? What if you took that equity, that sleeping giant, and put it somewhere else where it could work harder for you? This is the question top-tier operators ask themselves constantly. Could they sell that first property and take their capital, maybe a few $1,000,000, and reinvest it into a bigger, better deal? Maybe a $10 million property with more upside potential, a place where they can get a higher return and significantly scale their portfolio? This isn't about being greedy. This is about being smart. It's about being an active manager of your wealth by constantly evaluating your ROE and ensuring every single dollar of your equity is working as hard as possible. You're not just growing your portfolio, you're compounding your returns exponentially over time. You're waking up that sleeping giant and putting it to work. The biggest growth killer isn't a bad market or a bad tenant. It's the silent killer inside your own portfolio, idle equity. Don't let your wealth sleep. Make it work, make it grow. That's why you should partner with Princeton Pacific Capital, where we protect, preserve, and grow our equity with every investment.